All right, what's up, traders? What's up, tycoons? Super excited for today's video. We're going to take a look at gold, break down gold, take a look at a recent conversation that was had between Greg Barnes and Greg Bonnell. All right, highlighting some of the things of gold and his opinion on gold. Then we're also going to break down some of the charts. We're going to take a look at GLD. All right, we're going to take a look at the gold futures. All right, then we'll also take a look here on a macro scale. If you look at the monthly chart, we do have a nice five-wave structure here. I'll go into what that could possibly lead to. Then we have some really nice ratio charts here. We have GLD divided by tech versus the S&P 500. And you can see these normally trade in a divergence of each other. Then we have the GLD slash SPY ratio chart. I went over this one in my last video saying, hey, we could end up seeing a a breakdown here in GLD and gold as general. Right, there was some nice warning signs here. And then if you look at the gold futures Bitcoin ratio chart versus the S&P 500, you can also see that these trade in a divergence of each other. We're seeing lots of signs here right now. I'm going to break all of those down for you guys. Be sure to smash that like button, subscribe to the channel if you guys are new. Gold really tends to run with Bitcoin the most. The charts tend to perform very similar to each other. Okay, and we saw some warning signs for gold based off of Bitcoin. And I was mentioning to some people in the Discord, we can see here that gold is pulling back. It's back over here to right around its early stages of March. It's low there. We're going to see if it can hold that level or if it breaks that level. Full disclaimer, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. Trading in stocks, bonds, commodities, and crypto involve a significant risk of loss and is not suitable for all investors. So be sure to read through the full disclaimer, and we'll go ahead and hop right into the video. Now, we'll start off talking about Greg Barnes, the head of mining equity research at TD Securities. He tells Greg Bonnell why he thinks the trend for precious metal is still pointing higher. And one of the things that he thinks of is inflation. Obviously, people worried about inflation using gold as a hedge against inflation, weakness in the dollar. We've seen some of that year to date. Obviously, concerns around the debt ceiling ongoing. And I think we've seen some central bank buying as well, which has been a big support for the gold price. And that's come mostly from developing countries. And with the US sanctioning Russia and sanctioning some of their cash holdings outside Russia, gold has become something of a safe haven for central banks globally as well. So I think there's multiple factors that have been driving gold. Two, as well, is the Fed, what they're doing, what they're going to do with interest rates. And we know if we look back historically, when the Fed starts to cut rates, that generally is good for gold. And the opportunity cost of holding gold goes down. So gold prices go up. And I think there's some anticipation built into the gold price about when the Fed will actually start to cut rates. So multiple things driving gold. Now, I do want to add one point. We have started to see gold pulling back, and we have actually seen the odds of another rate hike increase, right? Really since the beginning of the year, people have been, wondering, okay, is this going to be the next Fed rate cut? Is it, or pause, right? Is the Fed finally going to pause? And if you take a look, all right, the odds are actually higher now that we will get another rate hike again versus the very low odds that they had just a few weeks ago, right? Now, could it substantially go higher for these levels, right? It was quite something to see it break 2000 and go and get up to multi-year highs at that level. That mid 2000 range is not out of reach. 2500 certainly is a price. It's a nice round number, and I think it's something the market will look for in that kind of environment. And the Fed is cutting rates, so I don't see any reason why it couldn't get there. So at 2,500, what about the mining sector itself and those names levered to gold? Would that mean good things for them, or could we see some divergence? Because I know there's other pressures, like the price of what they're taking out of the ground is one thing, and then I guess the cost of taking it out of the ground. And Greg Barnes says exactly. And the cost pressures have been the big issue for gold miners over the past 18 months or so. Particularly in 2022, costs were up anywhere between 15 and 20%. So a lot of the increase in the gold price was offset by higher costs. Clearly, margin expansion is what we're looking for. So at higher gold prices, if we see the cost pressures come down, that would work very well for the gold miners themselves. But what could stand in its way? What would keep it stalling? Well, if the US dollar strengthens for whatever reason, which it shouldn't do if the Fed is cutting rates, that's one thing that we've also seen. All right, we've seen the dollar starting to increase, and the dollar has been rallying here recently. We are seeing gold pull back. Inflation does come down. Some of the safe haven attributes for gold as an inflation hedge will fade. And then central bank buying. If that dials back from the very strong levels we've seen recently, that obviously wouldn't help gold at all. And we've seen record levels of central bank buying. So I'm not sure if that can continue. So there are things that could hold the gold price back. But again, I think if we're in a new environment where the Fed is cutting rates, that should be good for gold, and we should see higher gold prices from there. And next, they want to ask him about the earnings season that we've just been through the miners, right? And how he would characterize it. He says disappointing as expected. And Q1 is always a weak quarter, whether it's seasonality, whether just a reset after what is typically a strong Q4. Companies try and push hard in Q4 to meet their guidance for the year. And there's always a bit of a setback in Q1 as a result of that. And I think we saw that to a bit of an extreme level in Q1, both on the gold side and the base metal side. But we are seeing improving production through the balance of the year as a number of projects come online, grades improve, less maintenance work done. So I think we will be seeing improving production both on the copper side and the gold side in the second half of 2023. So now that we went over a nice little interview about gold and the prices surrounding gold, let's dive into the chart. Okay, now markets tend to move in 5-wave and 3-wave structures. So, here we got a very nice 1, 2, 3, 4, 5 up, all right? And we came right up to our supply zone that we were targeting here with this candlestick over here. And, there were some warning signs that we were going to get a pullback, right? If you take a look, okay, you can see here that, we have this high, we have this higher high, and then we have this higher high. But you look at your RSI, we have a high, we have a lower high, we have a lower high here as well. So we have this divergence, and in this case, a bearish divergence where price action is making higher highs and the RSI is making lower highs. This is a simple term known as bearish divergence, and it's an indicator you could see a pullback, and we are pulling back here in the price of gold. Not only on top of that, we did have 2 MACD crossovers to the downside where this red line crosses below the yellow line, and those are both signs of a potential exit signal. And, again, we're starting to see that pullback. Now we're holding above our major Fibonacci retracement levels here. And you can see that these are very useful for spotting trend continuation, right? When we're in the downtrend, we move down, we retrace up to the fib levels, continue the trend, retrace up to the fib levels, continue the trend, retrace up to the fib levels, continue the trend, right? And over here, once we start, going bullish, we can see we flip the fib levels to support from resistance. We start a new uptrend, all right? We retrace to the fib levels, continue the trend, and now we're retracing to our fib levels here. So 179, 177, and 173.63 are going to be, basically your 3 big support levels right now. We do have 2 gaps down to fill on the GLD chart that are pretty close, all right, down to about 170, just above 170. You have to remember, these gaps, they have about a 90% chance of filling most of the time. And the big question is when they're going to fill, not necessarily if they're going to fill, right? You can see over here when we gap down and we had this big gap up to fill, we did end up coming and filling that gap within a relatively short time, about 2 months. Just a quick example. And then we have this big gap all the way down here to about 152.10. But ultimately, we're not really going to be bearish until we're below 173.63 on the GLD chart. Again, remember, that is because these are the fib levels. And even if we retrace all the way to 173.63, that's still healthy retracement territory to possibly continue the trend, right? Now, if we break through our major retracement levels and we flip them to resistance from support, we will be bearish below there, and most likely we're going to come back down and retest some of our previous lows around 169, maybe even around the 150s, okay, or the high 160s. So, or the low 160s, sorry. So we do need to be cautious, okay? But for now, the big thing that I'm seeing is we have this rounding top right here, and this is a topping sign, okay? This generally isn't what you want to see. Over here, we got a bottoming, a nice round bottoming, okay? And it ended up turning into a cup and handle. So we need to be a little bit cautious of any dead cat bounces that could potentially turn into an inverse cup and handle here. We need to start seeing some nice consolidation, some movement sideways, really absorb some of the price action. We don't necessarily want to see things continue to keep heading lower here. All right. So that's pretty much it for GLD. All right. If we take a look at the gold futures daily structure, the way these things work is you're going to look for an ABC correction after your 1, 2, 3, 4, 5 impulsive move. Now, the gold futures did very similar to, the GLD chart, right? We had the nice rounded bottom here. Okay. And we came up to our supply zone over here. We hit our wave 5 targets here. Okay. And after you get these wave 5s, you would look for an ABC correction, and that can take us anywhere down to about 1876 to 1916. And we already passed through that 1950 threshold right here. So, this would be our A wave down. If this is the bottom of this A wave, and we'd be looking for some type of a bounce for a B wave, and then ultimately one more leg down for a C wave, and that would give us our correction wave. And from there, we could potentially start the next 5-wave impulsive move. But we need to be mindful, if this turns into a 5-wave move, 1, 2, 3, 4, 5, then that would throw out some of the bullish structure that we have here. But at the moment, okay, things are still looking good. We're, expecting this pullback. We had the bearish divergence right here. It's highlighted. We had the 2 MACD crossovers, and we're expecting an ABC move after a wave 5 impulsive, has been completed, right? Now, even when you zoom out on the macro, okay, these are monthly time frames, right? And we see we have a 1, 2, 3, 4, 5, right? And we just hit new highs, and you're supposed to hit your new highs on the wave 5. So it makes a lot of sense. And each time we pulled back, we pull back to our major retracement levels. So, we went over the gold futures, the shorter scale right here, the fib levels. But when you zoom out and go to the macro, okay, we could potentially even drop all the way down to 1400, and that would still be healthy retracement territory for, a new cycle, right? For the next bullish cycle to start. Each time we've completed, the odd number waves, 1, 3, 5. Okay, you see we get a pullback to our major fib levels for 2, a pullback to our major fib levels for 4 here. And so we're looking to see, are we going to pull back to potentially 1642, 1531, or 1419? That's a little bit more of a bearish scenario from where we're at right now. But when you look at the macro, it still would be in bullish territory, right? And rather just that healthy retracement territory. So we're going to see, do we, continue this shorter uptrend, right? And, continue heading up higher, or is it time for potentially a larger pullback on the macro trend on the much larger time frame? Now, I mentioned that gold follows Bitcoin very much, and it's a little bit of a leading indicator. And so you can see here Bitcoin at the same exact time period where gold was, okay, the gold futures. You can see Bitcoin actually broke through that level and has been doing a good job of flipping it to resistance now from support. So we don't necessarily want to see that in gold. Okay, we want to possibly see if Bitcoin can start to rally and get back above this level here, and we want to see gold maintain above this level. If we break through this level, you can see that there's thin structure here. Okay, thin structure, right? And it could be a quick move down for our next correction. And remember, we have those daily gaps down to fill on the GLD chart. So that's definitely something to be mindful of. All right. Now, Bitcoin can be lagging, or it can be ahead of the, curve sometimes too as well. Just depends on how you want to look at it, right? If we see over here, the gold futures bottomed out earlier before Bitcoin did, and Bitcoin was about a month behind. So, maybe Bitcoin is just behind on the positive price action, okay? Or maybe this time, it's actually leading the way, all right? And we're going to see gold start to see a drop here in the sometime, within the next month or so. Maybe it's time for gold to catch up to the price of Bitcoin, okay? This is GLD divided by tech, okay, versus SPX, all right? And we can see that these two tend to trade with each other in a divergence, okay? So, once we see, essentially the gold tech ratio going up, you'll see the S&P 500 going down. When you see the S&P 500 going down, you see the gold tech ratio going up. You see the gold tech ratio going down, you see the S&P going up. And the only time that there was a divergence where they were both green, okay, and both going up, that ended up being bearish for gold, for the gold tech ratio, and we ended up seeing a pullback there and a continuation in the S&P 500. And you can see right now the S&P 500 has been bullish, so it's no surprise really that we're seeing weakness in the gold tech ratio. Okay, clearly you can see, historically that's kind of been the trend. And the S&P 500 is still rallying right now. So, if you're looking for some bullishness in gold, most likely you're going to want to see tech pulling back. You're going to want to start to see Bitcoin performing well. That's kind of what this ratio charts are showing you guys. If you take a look at the GLD/SPY chart, okay, the ratio chart here, we did have this rising wedge that I was trying to warn people of. We broke through this level, and we could be coming back down to retest some of the lows of the beginning of the year, right around February. We also rejected the major fib levels here, right? When you look at the swing high to the swing low, we have this very strong move to the downside. We rejected the 38.2% level once, twice, 3 times, triple top. Now, the thing about triple tops is that if we come back up into this range, the likelihood of the outcome of a breakout is stronger, because the more times you test the level, the weaker it gets. So, if we can maintain it, because what I want to highlight here is we're still in a bullish structure. Okay, this is a smaller structure, this is a micro structure, this rising wedge, but the larger macro structure is bullish here. Really since the beginning of 2022, right? If we take a look at the timeline here, 2022, the GLD SPY ratio chart has been in a bullish uptrend, and we're just trading in the lower half of that uptrend right now. So we're going to see if we can bounce off of this area here. If we do continue heading lower and come back up and try to break through this 38.2% retracement on the GLD SPY ratio, this is gold futures / Bitcoin, okay, that ratio versus the SPX. And we can see that these two also trade, divergent of each other. When you see the gold futures Bitcoin ratio going down, you see the S&P 500 going up. Right. And when you see the S&P 500 going down, you see the gold futures Bitcoin ratio chart going up. And right now, this chart is going down, and we're seeing the S&P 500 going up. So, a lot of signs to me are saying that we need to see the S&P 500 pull back to see gold go up. Okay. Also, the dollar has been rallying pretty hard as well. That's made things a little bit difficult for gold to rally. So we'll see if we get some pullback in the dollar. We'll see if we get some pullback in the S&P 500, and potentially if we do those, all right, and we start to see Bitcoin rally, then we could see gold rally here as well too. So that'll be it for today's video. Smash that like button, subscribe to the channel if you guys are new, and I'm out.